Welcome to Crypto Chronicles, your go-to channel for all things related to cryptocurrencies and blockchain technology. In this video, we'll dive into the intriguing topic of Bitcoin versus gold, exploring the key differences between these two investment giants. Join us as we unravel the mysteries of Bitcoin and gold and uncover the factors that set them apart in the world of finance. Get ready for an insightful journey through the realms of digital currencies and tangible assets. Let's get started. Certainly, here's a more detailed comparison between Bitcoin and gold. 1. History and perception. Gold has a long history as a store of value and medium of exchange. It has been used as a form of currency for thousands of years and is widely accepted and recognized globally. Bitcoin, on the other hand, is a relatively new asset, having been created in 2009. Its perception and acceptance vary across different countries and regions. 2. Supply and scarcity. Gold's supply is limited by the amount that can be mined and the technology available for extraction. While new deposits are still being discovered, the rate of new gold production is relatively stable. Bitcoin, on the other hand, has a predetermined supply schedule built into its protocol. The number of Bitcoins that can ever exist is capped at 21 million, with the rate of new supply decreasing over time. 3. Divisibility and portability. Bitcoin is highly divisible, with each Bitcoin being composed of 100 million satoshis. This divisibility allows for microtransactions and makes Bitcoin well-suited for digital commerce. Gold, while divisible, is not as easily divided into small units. Additionally, Bitcoin's digital nature makes it highly portable, as it can be transferred globally within minutes. Gold, being a physical asset, requires secure storage and transportation. 4. Volatility and price performance. Bitcoin is known for its high volatility, with its price experiencing significant fluctuations over short periods. This volatility can present both opportunities and risks for investors. Gold, while not immune to price changes, has historically exhibited a more stable and less volatile price behavior compared to Bitcoin. However, it's important to note that past performance is not indicative of future results. 5. Use cases and market demand. Gold has practical uses beyond being a store of value. It is used in jewelry, electronics, dentistry, and various industrial applications. The demand for gold is driven by both investment purposes and industrial demand. Bitcoin, on the other hand, is primarily seen as a digital currency and a speculative investment. It has gained popularity as an alternative form of payment and as a hedge against traditional financial systems. 6. Correlation to traditional markets. Gold has traditionally been viewed as a safe haven asset and a hedge against inflation and economic uncertainties. It has a negative correlation to stock markets, meaning that it tends to perform well when equities are experiencing downturns. Bitcoin, while often touted as a digital form of gold or a hedge against inflation, has shown mixed correlation characteristics with traditional markets. Its correlation to other asset classes is still being studied and understood. 7. Accessibility and ownership. Buying and owning gold can be relatively straightforward, with options ranging from physical gold bars and coins to gold-backed exchange-traded funds, ETFs. Bitcoin, being a digital asset, requires a digital wallet and access to a cryptocurrency exchange. The process of acquiring and securely storing Bitcoin may have a steeper learning curve for some investors. The key differences between Bitcoin and gold can be summarized as follows. 1. Nature. Gold is a physical, tangible asset that has been valued for centuries. It is a precious metal that is mined from the earth. Bitcoin, on the other hand, is a digital currency that exists solely in a digital form. It is created and stored electronically, using cryptographic principles. 2. Supply. Gold has a limited supply on Earth, and the rate of new gold production is relatively stable. While new deposits are occasionally discovered and mined, the overall supply grows slowly over time. In contrast, Bitcoin has a predetermined maximum supply of 21 million coins. The supply is controlled by a mathematical algorithm, and new Bitcoins are created through a process known as mining. 3. Divisibility and portability. Bitcoin is highly divisible, with each Bitcoin being composed of 100 million smaller units called satoshis. This divisibility allows for microtransactions and makes Bitcoin suitable for digital commerce. Gold, while divisible, is not as easily divided into small units. In terms of portability, Bitcoin's digital nature allows it to be easily transferred globally within minutes, while gold requires physical storage and transportation. 4. Volatility. Bitcoin is known for its high volatility. Its price can experience significant fluctuations over short periods, which can present both opportunities and risks for investors. Gold, while not immune to price changes, generally exhibits less volatility compared to Bitcoin. It is often considered a more stable and conservative investment. 5. Use cases. Gold has a long history of being used in jewelry as a medium of exchange and as a hedge against inflation and economic uncertainties. It has practical applications in various industries, including electronics and dentistry. Bitcoin, on the other hand, is primarily seen as a digital currency and a speculative investment. It has gained popularity as an alternative form of payment and as a hedge against traditional financial systems. 6. Perception and acceptance. Gold has a well-established reputation and is widely accepted and recognized globally. It is considered a traditional store of value. Bitcoin, being a relatively new asset, has varying levels of acceptance and perception across different countries and regions. Its acceptance as a mainstream currency or store of value is still evolving. It's important to note that while these are key differences, Bitcoin and gold also share some similarities as stores of value and investments. Both assets can serve as a hedge against inflation and economic uncertainties, and some investors choose to hold both Bitcoin and gold in their portfolios to diversify their holdings. It's important to consider that both Bitcoin and gold have their own advantages and disadvantages as investment assets. Their suitability for an individual investor depends on factors such as risk tolerance, investment goals, and time horizon. Some investors may choose to hold both Bitcoin and gold in their portfolio to diversify their holdings and potentially benefit from the unique characteristics of each asset. And that concludes our exploration of the differences between Bitcoin and gold. We hope you found this video informative and gained a better understanding of these two prominent assets. Remember, both Bitcoin and gold have their unique characteristics and potential benefits as investments. It's crucial to conduct thorough research and consider your own investment goals and risk tolerance before making any decisions. If you enjoyed this video, be sure to like, subscribe, and hit that notification bell to stay updated with more fascinating content from Crypto Chronicles. Thank you for joining us, and we'll see you in the next episode.